Hey there, San Antonio. It's Krishna, and welcome to the June edition 2022 of the Housing Market Report. Um, so we've got a lot going on. It's the middle of summer. It's so hot, and everyone has a question about where the housing market is, where it's going. Particularly, are we in a housing market correction? Will a recession usher in a housing market crisis? And then finally, what's the outlook on mortgage rates? Um, all great questions, and we're gonna get into those right here, right now. I just want to say, I I wish that the market was more balanced. I don't know what it's going to actually take to become more balanced. I know there's a lot of opinions out there, and there's really a lot of guesses. I can read one headline after another, and one guess says that we're in a recession, or we're going to be in a recession this year, or it's going to be next year, or it's going to be in 3 years. So really, I mean, the simple answer is there. No one really knows. There's a lot of guesses, a lot of information. I'm bringing you the best information I can find nationally, and then of course local data, and then my humble opinion. And if you disagree with that, that's totally fine. It's just an opinion. I want to help as many people as possible, and the best way I could do that is giving you some information and then my perspective on it. So, first question here: are we in a housing market correction? Let's look at a definition of housing market correction. And it says here via Investopedia, a correction is the decline of 10% or greater in the price of a security, asset, or financial market. If we look in closer on this slide here, we see the home price forecast for 2022. And this is a recent forecast. The average of the opinions is 8.9% appreciation rate for 2022. So completely in the opposite direction of the definition of a correction. And locally, let's look at some local data here. And this is as of this week here, June 12th data. We are at 15.4% home price appreciation year to date. So from the beginning of 2022 to right now, we have seen 15.4% appreciation, and all the whole while we've had increased interest rates along the way. So we're still seeing appreciation in the market. Will this hold up through the entire year? Maybe not. We may see a seasonal pullback in the fall like we normally do before COVID came around and wrecked all of our models for forecasts. But that's still quite a bit of appreciation already in the market for us to consider. So moving on to the next question: will a recession push us into a housing crisis? Let's look at the last few recessions. 1980, we had a recession. We experienced 6.1% appreciation. This is national. This is national data via CoreLogix and the balance. 1981, 3.5% appreciation. Another recession, kind of a double dip there. 1991, we did see a pullback there in that recession of 1.9%. That doesn't fit the definition of a correction, but nevertheless, it was a negative number. 2001, 6.6% appreciation. Okay, that's looks like our dot-com bubble there. 2008, okay, bona fide recession, bona fide housing market correction, all bundled up. Remember the fundamentals in that market. I remember going around taking folks to home builders, and any day of the week I could find 10, 15, 20 homes in a community to sell them because they were completely full. They had so many specs on the home on the market, speculated homes being built ahead of the market to move people in, builder to builder. So a lot of different fundamentals there happening that led to that. Lots of really thin credit allowed to purchase homes prior to 2008. And then 2020, again, COVID hit, 6.6% appreciation rate during that recession. So no, the answer is no. Recession does not automatically equal that we're going to go into housing crisis. We may see pullbacks in other areas. So what are interest rates up to? Interest rates and the 10-year Treasury yield are at about 2.2 difference, okay? 2.2 difference in percentage. So as the Treasury yields continue to rise, we can expect there will be some increase in mortgage increase. And there is a little bit of fluctuation there. As you can see, it's not a hard 2.2. It can have some fluctuation, and that has to do with how many buyers are in the market at the time. Are they demanding mortgages? So that's why they're incrementally increasing the rates. They don't want to scare the market off completely by jacking rates up overnight, too fast. But they are continuing to raise those rates and looking for their desired effect. Another look here on mortgage rates. As you can see, we went from 3.1% at the end of last year all the way up to 5.3% this year. And we have noticed a relatively flattening out of the rates. And my opinion, that has to do with just refis basically drying up completely, and that is a part of the demand piece. Because we're all using the same banks to do mortgages. Whether it's a mortgage to refinance or a mortgage to purchase. And right now, the demand for refis is just really non-existent, and all you have is purchase business. So there's I'm looking at a little fluctuation here, a little flattening of that. It could change as interest rates increase based on the Fed's rate, but we'll just continue to monitor that. Existing home sales, as a result, we're looking at via the National Association of Realtors are now normalizing. Okay, we're looking at pre-pandemic 2017 through 2019 numbers. As you can see, they're hovering around 5.3 to 5.5 million sales. And you look at 2020 and 2021 respectively, where we hit 6.1 million sales there at the height. We're now back down to 5.6 million sales in 2022. So we're seeing some normalization there, which is a good thing. We'd like to see that in the market. Hopefully that will translate sometime soon into much slower appreciation rates that the market can handle. People need their wages to catch up to what it costs to own a home, and this is one piece of good news here in the market. Locally, supply, unfortunately, local supply is still depressed. We still have such a low amount of supply. We are seeing more homeowners put their homes on the market, but just slightly, and it's just not enough. Once the listings come up as new, they are getting traffic. They are getting offers, especially if they're priced correctly. I have seen some that are not priced correctly, and they are suffering as a result. You look at some of these homes, and you can't understand why they're still on the market. But if you look at the pricing compared to what homes are selling for in the neighborhood, then they're just way off. I've talked about it before. Psychologically, if you are pricing your home above the market, ahead of the market rather, okay, if the average sales $250 and you're putting it up there for $300, buyers they're they don't want to get rejected, so they're not going to put an offer in. So keep that in mind. Don't shoot yourself in the foot. Make sure that you're looking at apples to apples, and price the home just below, where the market is, and the buyers are going to reward you. They will come. You will have a multiple offer situation if you do it the right way. Moving on to closed sales here in San Antonio. Closed sales did have a slight pullback at negative 0.8%. We're still in elevated territory. We saw a huge surge in closed sales in 2021. So we're still elevated. We're not back to pre-pandemic levels. It's no guarantee we get back there. We are a growing city, so we're naturally going to see more sales as the city gets larger and larger. But we did see a small pullback in closed sales, and I think that is really a result of just the inventory shortage. We're not seeing enough new listings come to the market to see larger numbers here. So if that changes, we may see larger numbers. Yes, inflation, yes, interest rates may impact this at some point, but we'll call that when we see it. So overall, the market here in San Antonio is still very strong, still very much tilted to the seller side. That can change here in the future if we keep marching forward with interest rates. Unfortunately, that's going to knock some buyers out, and barring some black swan event that significantly forces prices down, it's not going to be any help to have lower prices, but sky high interest rates for buyers either. So bottom line, if you can sell, if you want to sell, you still have a window of opportunity to sell and make good money on your home. If you're looking to buy, if you need to buy, and you can buy, and you want to buy, and you plan to be there for a long time, there's nothing wrong with being in the market. But if you have just a great deal on a rental, you've got in a garage apartment or something like that, and it's really cheap, you're paying down your bills, you're paying off your car, you're paying down student loans, why not stay there? Nothing wrong with that especially if you're doing all the right things with your finances. So hopefully these insights give you a little bit of information to help you make the right decision for your household. If you have any questions, I'm always here. But otherwise, I will see you on the next video. Thank you for joining me.